Sorry about that. The owner of T3 wanted to give me a call to let me know my P&L swings are too big. I get that phone call from him every once in a while. Oh man, I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed by T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Um, Position disclosure, I'm out of Ion Q. I got all out of T-Triple-Q short, but then I got back into T-Triple-Q short. So that's still showing in there. And then I shorted some Palantir somewhere above 91, 91, 92 towards the end of the day as well. Just to kind of get that back on the books a little bit, get some shorts back on the books after such a massive move. Oh man, holy cow! Is this the biggest up day ever? I don't know. I'm seeing S&P 500 unofficially closes up 9.52%, the largest one-day percentage gain since October 28th, 2008. The NASDAQ unofficially closes up 12.16%, the biggest one-day percentage gain since January 3rd, 2001, and the second largest on record. Wow. Wow, 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 wow. Um, Guys, we called it. Trump put. Trump put came into effect today. We saw him show his hand early in the morning this morning. He showed his hand. He said a couple of things, and I noted to you guys, wow, this is the first time that Trump has said anything supportive of about the market. He said, let's get going with these tax cuts, which I've remarked in several afternoon meetings that it seems like Trump doesn't want the market to move higher because he'd be trying to lay out everyone the bigger plan. Like it's going to hurt a little bit, but the tax cuts are cutting. Get ready for the tax cuts. First time we really saw any of that language come out of his mouth today. He also said, I think it's a good. Someone, if you can, give me the exact quote. But basically, he said, like, it looks like a good day to buy the dip today. So we were like, okay, Trump is saying to buy the dip. And then he did the thing with the NVIDIA chips, reducing the restriction on those NVIDIA chips that go to China. And it's like, okay, that's interesting. Look at that. All of a sudden, three different things all at once when we haven't seen anything from this guy. We got three different supportive things that come out. And then, holy cow, bam, 90-day pause on it, and we got what we were prepared for. I said it in the morning meeting today. I said low probability, but maybe we get a 90-day pause or some sort of a pause. If that happens, be prepared because the market will absolutely rip. And I remember when we saw the rumor of that a couple trading sessions ago and the market started to rip, my biggest problem was that I didn't have offers out high enough in a couple of my stocks per my game plan because it seemed so far away that I didn't get the offers out far enough. So I said in the morning meeting today, if you've got some really reach targets out there on some longs, make sure that those offers are all the way out there because you could get a spike on a headline that happens just so fast that if you're not pre-prepared for it, you might not be able to get the sales off and get the offers out. And lo and behold, it's what happened. He showed his hand in advance. The pressure was mounting on him from all sides. And as far as I'm concerned, he caved. Everyone, except for one or two people, even from his support group, started going after him over this tariff situation. Elon Musk, Bill Ackman, a lot of really smart people, Jamie Dimon, and then he caved, and the market did exactly what it should do. It ripped. Turning over to the technicals, I still got the 5-minute chart up. You can just see this movement just absolutely bonkers, absolutely insane. Turning over to the daily chart. So we retested 550. I think I said yesterday on the right headline, you get a retest of 550. 550 is a huge level. It corresponds with the 21 EMA, and it's the level that we broke down from. So 520 was an important level. The gap fill was an important level around 536. And then beyond that, the space that we broke down from, which is basically 550, which is also the 21 EMA on the daily chart. It makes perfect sense to me that the high of the day is just basically in front of that 550 with the way that we moved off of that news. This is a great day one. It's not impossible for us to see some continuation of a short squeeze higher. I don't think it's impossible for us to see somewhere between 560 and 580 on the upside in the short run. The big picture question, and I'm still learning new things, learning some terminology here from Pat's note this morning that was a summary of a Goldman note that I'll come back over to here, where they talked about structural bear markets, cyclical bear markets, and event-driven bear markets. And basically what this note here says is that the current bear market that we have been in has been an event-driven market. So the definition in here of an event-driven bear market is triggered by a one-off shock that either does not lead to a domestic recession or temporarily knocks a cycle off course. Common triggers are wars, an oil price shock, an emerging markets crisis, or technical market dislocations. The principal driver of an event-driven bear market is higher risk premia rather than a rise in interest rates at the outset. So that's what we have been in per Goldman. Now, the question here that we need to pose is kind of what they're saying is a possibility, if you read through this note, is that can this basically go from being a event-driven bear market to a cyclical bear market? Cyclical bear markets typically triggered by rising interest rates, impending recessions, and falls in profits. They are a function of the economic cycle. So I don't think we have to worry too much about rising rates, but impending recession. So that Goldman, pretty much immediately after Trump announced the pause, reduced their recession probability from 60% back down to, I think, 45%. 45% is still high. So the question basically is, like, this is great that we got this pause, great that we got this relief rally, great that there are going to be negotiations that are ongoing. There's even a read-through here, even though we further escalated again with China, there's a read-through here that there's going to be a China negotiation that ongoes as well. The question that I don't have an answer to at this point is, does the event-driven bear market, does even 10% tariffs, I mean, this was the argument that I was going to make last Wednesday, is that 10% tariffs can still lead to a growth slowdown and a higher impact on inflation. So does that impact of even those 10% tariffs and some of the other things that have been ongoing, like the exportation of cheap labor and some of the austerity measures coming out of the U.S. government, does that lead to a fall in profits, for one? We could still see some degree of margin squeezing ongoing from the Apples of the world, and or some sort of impending recession from a growth slowdown. That's the question. Today is great. It's a huge relief for the market. They squeezed the hell out of the shorts. I do think that there is the potential for us to squeeze this market even further. But now what we go into more of, I think, is the economic data over the course of the rest of 2025 to see what the read-through is on inflation, growth, and employment. And that will then dictate whether or not what was an event-driven bear market, which hopefully we are now more or less through, then actually leads into the cyclical bear market. So I'm hyped. I had the best day of my career today, made a lot of money. Market gave this huge bounce back. I'm also hyped that we were like perfectly on point with our expectations. We communicated them well. We read through the Trump put really early on in the day, basically in the pre-market, Then we actually got it to trigger. It brought us all the way up to this SPY 550, more or less, that we talked about as a huge, huge level to pay attention to, that we could test on this type of news. Awesome, awesome, awesome. I would not be necessarily so enthused, though, that I'm willing to buy this market at any price. I'm not. The amount of downside extension that we had, plus the VIX at 60, plus I really, really felt that we could get what we got today, which is Trump kind of caving on some of this stuff, led to a great day one. We can get some follow through, but I don't necessarily think that this brings us right back to all-time highs. So I'm going to repeat what I think has been a theme of the last month, which is be greedy, don't be stupid. I hope everyone was greedy enough today that they got paid, that they caught this move on the longs. But don't be stupid where you're holding 100% of your positions or things like that into 550. Don't be the FOMO trader who maybe missed the move and now we're at SPY 540 plus and you're starting to buy. Don't be that trader either. I think a lot of us caught this. There's a lot of really, really good P&Ls at the firm today, and that's fantastic. If you're not one of those people, it's fine. Really, it's fine. It's a learning process. Learn from it. I've been trading for a long time now. What we saw over the course of the last week is some of the most insane price action I have ever seen over the course of my career. Maybe the most insane price action I've ever seen over the course of my career. So if you're new and you're just getting started and this is the environment that you're dealing with, I think that could be very, very, very hard. I don't even know how someone with no experience would be able to trade this. To be honest, it's damn near impossible. These moves they're too big, honestly, for someone who's just trying to learn the business to be able to properly learn from and execute from. But all you can do is keep a good journal, keep a good log, learn from mistakes that you made, learn from things that you did well also. I definitely also personally, and I've been doing this for a while, made some mistakes here over the course of the last week or so. Also, certainly did some things right, and I'm gonna, check this off in my brain as an additional learning experience for my own improvement over time. And if you didn't catch this move, if you didn't do really well today, again, it's fine. Don't trade with FOMO tomorrow. The only thing that you can do tomorrow is do the right things in respect to where the market currently is. So that's really all that I got. I mean, it's all about the macro. It's all about the market itself, and then you break it down to the individual stocks. Almost didn't matter what you're in. I was so frantically trying to manage my positions into this up move. I mean, it was just so crazy that I almost couldn't look at anything that I wasn't in. So maybe we'll just type up a couple stocks real quick and have a look about where some of these things are. So SPYs basically worked their way all the way up to 550. Qs, similar deal, kind of getting into a resistance zone from where we broke down from in these mid 460s into the 21 EMA. There's room, I think, for this to work its way higher, even potentially retest like that March 25th high. But hell of a day one to the upside. What about the IWM? IWM not quite as good. What's the percentage close on the IWM? Yeah, so the IWM is relatively weak, only up 8.5% or so on the day. Only up 8.5% or so on the day. So there's relative weakness there. It's further away from the 21 EMA. It's not retesting that. It's not retesting the area that it broke down from either, which is 197. So very clearly there is relative weakness in the IWM, which probably means that the SPY outperformed the RSP. Am I correct? Yes, I am. And that MAG 7 was a lot of the bigger leader here. So let's take a look at some of those MAG 7 stocks. Apple, which had been one of the worst ones because of the China effect, into the 80 EMA only, so relatively weak compared to the Qs, into the 200-day. Not into $200, not the 200-day. Closed up 15% on the day, though, which is pretty wild. Google, nice bounce back, retesting 160. Google closed up 10% on the day. NVIDIA was a monster. NVIDIA was one of the early leaders and early relatively strong names. Probably also benefited from that chip headline that was out this morning. NVIDIA up 18%, overshooting the 21 EMA. NVIDIA looks great, actually. AMD giving a really, really good bounce back, working back towards that $100 level. What about Microsoft? Look at the Microsoft chart. Microsoft up 10%, huge move, reclaiming levels that it broke down from, well overshooting the 21 EMA. Amazon, I'm not getting a daily candle on my Amazon chart for some reason. Amazon up 12%, there's the candle into the 21 EMA. Meta, another sick candle for Meta. Meta is up 15% on the day. Really, really wild. What about some of our sectors? XLE. XLE's struggled to get out of its own way, up 8.5%, so similar to the IWM, and not even up to the 80 EMA on the daily. This XLE and the price of oil itself are important because there's a read-through on recession fears. When you go into a real recession, the price of oil goes down, less people are using it, less people are flying, less people are traveling. So really good bounce back from XLE, which is much needed. Financials, XLF, huge move higher. XLF up almost 8%. So yeah, I mean, these leaders really led their way up. We'll see how the banks do on earnings reports, which I think begin to come out at the end of this week. So that is pretty much all that I've got. You know, great day one to the upside. We really needed it into that 550 area. I think it's a phenomenal spot to be really reducing long risk that you may have on, and then we can kind of take things from there. So that is all that I've got for today. I am happy to answer any questions that anybody may have. Oh man, I need a good night's sleep tonight. Oh yeah, I had said that there was going to be no afternoon meeting today a couple days ago, but then I had written into the VTF that I was wrong by a week. Next Wednesday I will not be able to do an afternoon meeting. Yeah, XLK up 24%. I'm seeing 13% on my level 2. Not sure, but regardless, it's a huge move. Yeah, I shorted some TQQQ and I shorted some Palantir as we got into those resistance areas today. Yeah. $24. Gotcha. What else, guys? Any other questions in the VTF? Not seeing anything for the moment. I'll go over to the YouTube. Yeah, Steven, that's what he said. This is a great time to buy. Definitely showed his hand. You definitely want to listen to him when he says it's a great time to buy. We'll remember that for the future. From Robert, how much pullback would you expect from TQQQ, and where would you see rally? Not 100% sure on the question. Like, where do I expect a pullback? So I don't like to analyze the technicals of the TQQQ. I'll start by saying that. Even though I trade TQQQ, I trade them based off the QQQ technicals. I don't like the TQQQ technicals to analyze in the same way, just because they are subject to decay. So I would rather trade TQQQ for shorter term day trading, because you can get a lot of bang for your buck. The ETF is cheaper than the QQQ ETF. It is leveraged, but it is also something that has decay. So you got to be careful. Insofar as a pullback on the market, if that's what the question is, I'm not sure. I really don't know what to expect after such a big day today. We could easily get some sort of inside day tomorrow, some sort of rest day. We could also get follow through. We could also see a little bit of a percentage pullback on today's trading session. So if that were to happen, if the pullback were to happen, I do not want to see this market lose like this gap fill. So like 450 for the Qs, or 536 70, I guess, is the exact price on the spies. So if we get a pullback, I ideally do not want to see those areas get lost. And otherwise, it could be a healthy digestion. But if we start pulling back too deep, then it can become a little bit of a problem. From Apex Joy, you think that the next market will become less correlated like the last few weeks, but more sector specific and selective. So one thing that we want to see as the VIX comes back down is do we go back into like one of those markets where it's about dispersion and correlation again, where we saw a lot of periods of time, though certainly not recently, where the market was super super stuck, yet certain stocks would be ripping and certain stocks would be weak, and then it would average out where the S&P would be up like 0.25% or whatever. So I'm not sure if that's going to be returning necessarily tomorrow, but I do think that as the VIX goes down, outside of insane news hitting like it did today, that our ranges will begin to compress again. I'm expecting. I mean, how could it not? Almost with the way the ranges were these last 4 or 5 trading sessions, but I'm expecting ranges to begin to compress back to some degree of normal, and then when the ranges compress, then the possibility of dispersion increases. So we'll see how that comes. From Jeff Wade, just thought I would tap in and see everything here. Okay, cool. Welcome, Jeff. From Kevin G. What a day with outsized market moves, especially in indexes. I primarily play on the 5-minute chart, where it's been harder to get the usual setups. Do you feel like we're more in a scalping market? I'm still using the 5-minute, but we'll primarily be focused on the 1 to 2 minute time frames. Yeah, it's an interesting question. I think that there's a couple different ways that you can approach trading the market right now. You can certainly approach it as a scalping market. Like if you listened at noon today when I was speaking with Mike Camo, Sammy Abusad, and JR Romero, JR is a great scalper, and he's just been loving this market for its scalping ability, and that's what he's primarily been focused on. For me personally, while I definitely don't dislike that idea or dislike that thought process, I, you know, as my career has moved forward over the course of the last several years, I've become increasingly focused on capturing big moves on the daily chart. So I think that taking a scalping mentality is appropriate, but I also think what I'm doing is less of that and more of like trying to be able to capture a move from SPY 480 to SPY 550 over the course of a couple of days. I mean, just remember on Monday into that gap down, Monday into that big day 3 gap down, we were communicating that was a buying opportunity. We called out the absolute low on Monday on the third 5-minute candle for a long, and I was saying at that time, be greedy, don't be stupid. So my approach is if I can capture that, I actually still would want to have stock from that move into SPY 550, because I remember the next morning when I was doing the morning meeting, right? So on Monday morning, I was like, we got to buy this 5% gap down on day 3 or whatever it is, most extended I've ever seen the market ever. We found ourselves a small time frame signal here. What just happened? We found ourselves a small time frame signal on this third 5-minute bar to buy. It closed well. Yesterday was a little bit of a disaster with the way we traded from highs to lows. But if your stock or whatever you were long never broke that opening low, it's reasonable for you to still have a small percentage of the initial buy. Anywhere from 5 to maybe even as much as 40%, depending on how greedy you want to be, of that original buy you still could have had, looking for some of the bigger targets that we had discussed at that time, which was basically this SPY 520 area, so that basically was achieved by the next morning, but then it was the 80 MA, then it was the gap fill, and then it was 550. That's what I was saying um, yesterday into the gap up. I was like, great spot to book some profit into this like 520 area resistance. Let's be greedy, not stupid. Book a little bit here, but be greedy. Have some for a move to the ADMA. Have some for a move to this 536 gap fill. Have some for a potential retest of 550 if um, if some good news comes out. It's something that you could see. So I mean, just it worked perfect. Not easy to hold through yesterday's pullback. I can tell you from myself, I was very aggravated yesterday. Some of you guys might have caught that a little bit when I did yesterday's afternoon meeting. I was very aggravated yesterday because I was being greedy, hopefully not being stupid, but I was being greedy. And because I was being greedy, I had the biggest, there's a lot of record setting going on over here, but the market's moving the way that it is. I had the biggest P&L swing from green to red in my entire career yesterday. I closed red after being up a nice three-figure number in the beginning of the day. I closed down three figures yesterday. Three figures, six figures. I was first figures. I was up six figures. I closed down six figures. I was grumpy. It was a massive move. I did book some profit. I booked some profit and I reduced some risk up here per the be greedy but not stupid game plan. And then I was like, oh my god, should I have taken off a little bit more than I actually did? I can't believe I gave back so much P&L. But then by doing so, when I was able to capture the move today, then it really led to even larger P&L, and finally into this 550 is more of the spot where it's like, all right, be greedy but don't be stupid. Now is where you should really have pared down some of the risk on the longs into that target that we established. So Kevin, bottom line is I think that a scalping mentality makes sense, especially if that's what you're good at, but also there is the potential to be able to capture these really big moves. That's what I think my team and I have primarily been focused on, and that's what I've been calling for from a game planning perspective over the course of the last couple of days to be able to capture this move. I appreciate it, Liam. From Scholastic Pie, in this news-driven market, how likely is it for a stock like NVIDIA to overcome its death cross that happened a few days ago? Do you think it is possible for it to gain and reestablish upward momentum? The last time death cross happened in April 2022. It took until January 23 to recover. Granted, the whole market was in bear market territory at that point. So I'm not a huge fan of the death cross golden cross thing, and I don't actually have a 50 on my charts here, so I can't even really analyze what it looks like. But sometimes you could get that 50 to cross below the 200 day, and then you could pretty quickly sometimes be able to get that to flip back up. Like any other technical indicator, it indicates something, but it doesn't necessarily have to happen. I am sure that if you could do some sort of historical analysis, that there are many, many, many examples of death crosses triggering that don't lead to anything more than a few day deep pullback that then reverses higher and gives you continuation. So I wouldn't put I would notice it like you are, but I wouldn't put too much weight on it either. I think that the real answer to your question comes from the answer to the question that I posed in the beginning of the meeting, which is, does our event-driven bear market build into a cyclical bear market? If the answer is yes, then you're going to have more of a situation like what you described from April 2022 through January 2023, where it could take a long time to recover because, I mean, bear markets tend to have long durations. I think that there were also some statistics on that in Pat's note this morning also that I was glossing through. Yeah, here. U.S. bear markets and recoveries since the 1800s, kind of giving you some averages, and it's using that Goldman Sachs concept of structural, cyclical, and event-driven bear markets. Structural being by far the worst. Looks like it has an average decline of almost 60%, whereas a cyclical, it looks like it's a little bit over 30%, and a event-driven maybe is around 30% or a little bit less. And again, those are average numbers, so it can change. In duration, though, this I think more answers the question. A cyclical bear market tends to last for 25 months, so 2 years or so. Um, Whereas an event-driven bear market can be much, much shorter. So that's the question. Is this just going to be an event-driven bear market that does not lead to a cyclical bear market? In which case, we could get to all-time highs by the end of the year. The average one, according to this, lasts about 6 months or so, it looks like. Or does this event-driven bear market lead to a cyclical bear market? In which case, then to answer your question there, Scholastic Pi, then you might have a situation where it takes a couple years even for your death cross to re-resolve itself with a golden cross on the upside. So to be determined. I appreciate the question from James John. Will the market price in the next sell-off? Will the market price in the next sell-off for when tariffs are unpaused? There's a lot of uncertainty out there. I really don't know. I think that the idea here is that throughout this 90-day pause, we're going to see a lot of deals go through. It'll be interesting to see what those deals look like. I really, really hope, and I will give Donald Trump a lot of credit if what this turns into is overall less tariffs on both sides. That would be, if the net amount of global tariffs are reduced because of this, that would be phenomenal for markets. That'd be phenomenal for markets. I'm not convinced that that's what's going to happen. So we'll see, what these negotiations turn into over time. If the net amount of tariffs is more than they were, prior to 2025, then that's a net negative for the global economy. So we got to see now what happens here over the course of the next. Alibaba just had a nice pop. We got to see what happens here over the course of the next couple of months. But that's the answer, and I don't know what's going to look like. From Robert, I know you don't watch the NQ. QQQ pre-market today starts rebuying where NQ London session starts strongly. Do you value that? I think it's something to note for sure. I try not to overly watch the futures, but I have been paying a little bit of attention to those charts these last couple of days just because the movements have been so crazy. From Steven, the biggest updates happen in bear markets. Yeah, for sure. The previous examples, so the S&P 500 closed up 9.5%, the largest one-day percent gain since October 28th, 2008. What was going on in 2008, where we had an even bigger update than we had today? It was a pretty crazy bear market. NASDAQ composite unofficially closes up 12+%, the biggest one-day percentage gain since January 3rd, 2001. Well, what was going on in 2001? It was the aftermath of the tech bubble blow-up bear market that we were in. The biggest upside moves tend to occur within bear markets, but that's also has to do with the fact that ranges get so much bigger, and you can really, really squeeze out the shorts in those up moves. Thank you, Dave. Dave trying to give me an example of a cross that didn't, one of the moving average crossovers that didn't work in recent history, but I'm saying it's the wrong screenshot, but I'm sure there's plenty of examples of that. All right, folks, anything else for today? I'm happy to try to wind this down on the day. Phenomenal day today. I really don't necessarily think that we're out of the woods, but I think that the worst of the insanity is behind us now. At least I certainly hope it is. And, we'll take it from there. So have a great night, everybody. I will see you all tomorrow.